Yo, what's really good, people? It's Curtis back with another portfolio update. I'm looking at my window. The weather is very, very gloomy weather, but it's been a glorious week in the stock market. So, I'm really, really happy with the improvement to my portfolio in the market. And speaking to some of you guys as well in the comments and on the community and so forth, I know that you're happy with some of the improvements to your portfolio. So, I'm just going to give you a quick, brief rundown of what's been going on with my portfolio and some general news in the market. Please like, please comment, please subscribe to the channel if you like that. But let's crack on, let's get going so you guys can enjoy your weekend. So, three of my stocks have given me an average of 17% growth since the last time I've invested, which is phenomenal. The first of which is Barratt. Where's Barratt? There you are. So Barratt, as you can see, it's 23.95% overall, but since the last time I've invested, it's been 14% growth in Barratt. That was primarily due to positive earnings guidance on the 10th of July. They're producing new homes, they're producing better revenues, they're producing better sales, better order book, etc., etc. I've covered this in a previous video and in my Simply Wall Street journal as well. But effectively, because of their performance, as you can see, the graph is going in the right direction and it's been positively growing. Do I see it stopping? Do I see a correction? Not really. I think if they continue to have such a great end of year guidance, then I think this will definitely continue until the end of the fiscal year. So I'm still a buy-in on Barratt. And I think that this is going to be, a very, very positive stock right until the end of the year. So, I'm really, really happy with the performance so far. And I think there's going to be an interim dividend payment and it's going ex-div on about the 15th of August. So I'm definitely going to overfund at that point. You probably will see a drop when on the ex-dividend date as normal. But I think overall, by the course of the year, Barratt's still going to continue to do well. Next is Vodafone. Now, Vodafone, as you can see, is in the green by quite some way for me, 7.3%, and I say that because it's never really been like that. As you can see from this graph, it's been nestling at the bottom always, and it's just kind of shot up right at the very end. Is it to do with 5G? No, it isn't. It's got nothing to do with 5G. In fact, it's completely unrelated. What's actually happened is that Vodafone is spinning off a new standalone business called Tower Co. This standalone business will comprise of 61,700 Vodafone masts across 10 countries, which include the UK, Germany, Italy, Spain, predominantly European markets. And this spin-off, which will be either spun off just as a separate business or it might even IPO, is going to be valued at around £18 billion. So a lot of that money will be going to paying down Vodafone's debt. Their debt increased when they acquired, I think it was Liberty Global or someone, an asset management firm or something along those lines. So because of that, investors have been a bit skeptical with the volume of debt in Vodafone. I've not liked the volume of debt in Vodafone. So obviously they're doing a great strategic move to hopefully reduce that down and generate some revenues. So it's got nothing to do with 5G, and I think that's actually a really, really good news story, that actually there's so many other factors that can improve a company's share price rather than something that you might think is the main factor. Something else that they're doing actually increases it really, really well. So hopefully 5G still pays off in the long term. My outlook is definitely still towards the end of the year, but to see a nice 15% growth in Vodafone in my portfolio is obviously very, very, very welcome. So it's great news on the Vodafone front, and I think the share price increase in the last day was like 10%. It's just crazy. But yeah, great performance from Vodafone, as you can see. The last major one is nestling right at the bottom here, but it's definitely not in the bottom in terms of performance this week, is Snapchat this week's performance, as you can see from this graph, has shot up 29%, which has been obviously phenomenal. Snapchat's revenue, so they obviously had their earnings update, and Snapchat announced a 48% increase in revenues, which is phenomenal. They mentioned an 8% increase in daily active users, which obviously for a social media platform, for any type of application, that is all about stickiness. Your daily active usage is going to be one of the most key metrics that you're going to be tracking. Also, they thought that they would have an earnings per share loss of 10 cents. However, it was only 6 cents. So obviously they did better in terms of the amount of loss that they forecasted. So obviously if they forecasted a certain amount of profit and they didn't hit it, that will obviously be a bad thing. But they forecasted a certain amount of loss and they didn't hit that, that's obviously a good thing. So all of those three factors have contributed to a fantastic performance in Snapchat, which has seen my portfolio reach 17.61%. Obviously I'm not holding that many shares in Snapchat through I've already covered this in a few videos in terms of my stock to watch, in terms of my last Simply Wall Street update of why I didn't sort of go gun-ho with Snapchat. It was obviously my mistake. It was something I analyzed and I decided against it, but it's still going in the green. And if you look at analyst reports and outlook for the future, they are forecasting Snapchat to go to the $30 to $34 a share mark within the year. So you know what, I'm not going to be selling, I'm actually going to be buying. There's probably going to be a correction at some stage, but there is going to be a buying opportunity, and I'll definitely load more into Snapchat for for at least definitely for the year to come, which is positive. Some other positive performance that hasn't really changed this week, but definitely worth calling out, is sentiment. As you can see, sentiment for me is sitting at 23.14%, and it's still the same business from the halo effect from the Fed mentioning that they're going to be dropping interest rates potentially, which has obviously seen investors move their money to gold, and the halo effect is improving gold mining companies such as sentiment. So nothing really changed this week. I mentioned that in the last video, but again, sentiment is still holding strong at 23% for me. Taylor Wimpey has actually started to improve as well, so that's worth also calling out. Taylor Wimpey has improved, and one of the reasons why they've improved is that they've announced 1,500 new homes to be built in Brockworth, which I think is a village in in the north of England. So Taylor Wimpey predominantly produce homes in the north of England, Scotland, etc. So again, that's had a positive impact on Taylor Wimpey's share price. So there's been just quite a number of really strong performers this week. Obviously some outstanding performers, which has seen my portfolio grow quite considerably. It's been about a 40% increase in profit, but in terms of my overall portfolio value, it's been about a 3% increase in portfolio value, which has been good. In terms of fallers, it's always worth calling out ones that are falling. Facebook, although still in the green, has been a bit of a fall. This is just still fallout from the Congress discussion that David Marcus obviously presented. There's obviously a lot of uncertainty around Libra, around its applicability, around its ability to do what it's promising to do, around its privacy concerns and data concerns, and Facebook becoming some form of, I don't know, kleptocracy that just governs the whole world, etc. So I think that is going to be something that Facebook obviously is going to have to address. Robo Global is an interesting one to call out. Robo Global hasn't been doing that great. I'm still in the green, but it's not been doing that great so far. But one thing that's interesting is that Legal and General Investment Management Firm, which is the management firm that launched the Robotics and Automation Fund, has launched 3 new funds, and one of them is specifically for artificial intelligence. So it'll be really nice to actually see that one on Freetrade, because definitely I would want to invest in that artificial intelligence. Now, obviously, there is artificial intelligence within automation and within robotics. It obviously depends on the business and what obviously the company is producing. However, I think it'll be nice to have one that's definitely dedicated. They've also launched one, I think, in water and in healthcare as well. So in clean water and in obviously healthcare. So a lot of those thematic funds will be very interesting. So I'm still really anticipating Freetrade's new investment platform, and hopefully there'll be a lot more of these ETFs which I believe in its applicability for the future and can be invested in. In terms of Trig as well, Trig is kind of in the red. To be honest, Trig was doing so well for so long. If you look at the year's performance, look at that. I mean, Trig has just literally been shot up for the whole year. So I kind of bought at a high point. This behavior for me is very expected, so I'm not really worried about Trig. They've just acquired a new wind farm in France. So usually when you're acquiring stuff, sometimes share prices tend to drop a little bit as well. but because obviously you've got less cash on your books. But however, I'm absolutely fundamentally not concerned with Trig, Robo Global. All of these things are super long-term investments for me, so I'll just keep on investing and seeing what happens for the future. Some stock which I think are actual buying opportunities at the moment is Aviva. So Aviva, as you can see, the share price has dropped quite a bit for Aviva. I think I've lost about 5% in Aviva since the last time I invested, which is really, really interesting. So they've launched a new health insurance plan for gambling and porn addiction. I don't think that's really the reason why the price has moved. I think the biggest news still dates back to June, which is the 1,800 job cuts to be cut back. And I think obviously any company that's cutting back jobs generally has a negative sentiment in terms of their cash flow and so forth. Now it might be that they're doing the right thing in order to, you know, maximize operational efficiency, but sometimes it just has a negative impact on the price. So, you know, I'm not too worried in the long term, and it's definitely still a stock that I'm more than happy to hold. CYBG, again, although that's in the green for me, as you can see, it's been a bit volatile. One of the main reasons for CYBG is the clarity on executive pay, one of the main pieces of news, and I think again this is something that bankers pay, bankers bonuses, like all of that stuff is always something that just weighs negative on banks in general. Remember seeing this with Barclays many years ago, and you generally see it with every bank. So obviously because CYBG has been summoned to be a bit more clear on their executive pay, that's probably had a little bit of an impact on their share price recently. And Lloyd's again, so similarly with so Lloyd's, I'm actually 6% in the red. You can see this graph here of Lloyd's dropping. And the thing about Lloyd's, because the share price is so small, just a 1 penny movement is like 2% in terms of the actual value of your portfolio. It's crazy. So 5p in the right direction can go a long way. But 1 or 2p in the wrong direction can also go a long way negatively. So they've had a recent settlement with Standard Life Aberdeen for the tune of 140 million. So that's probably had quite a negative impact recently, and that's probably dropped it by a penny, etc. But analysts still see it having a price target of around 75p. So I will never sell while it's in the red. I'll either average it down, or I'll just continue to hold and wait for it to improve in the long run. I think also in next year they're going to try and move their dividends to quarterly, which should be very, very welcome as well. So that should be very, very interesting. The last thing to sort of cover off is obviously this week, the UK has seen their new Prime Minister Boris Johnson. And I just wanted to give you my thoughts on what that means in terms of the stock market. Obviously, it's just my opinions from the stuff that I've read and my own opinions. But obviously, for me, he was expected to win. It's not really a surprise. And so I think his appointment was effectively priced in, and that's why you've not seen that much movement. And that's been corroborated with some of the stuff that I've sort of read as well online. However, in terms of the future performance for the stock market under his reign, he's mentioned that he wants to reduce a cut. He wants to create a cut in taxes, primarily income tax and stamp duty, and increase government spending. Obviously, if that's achieved, then that will have a positive impact on the stock market. So it depends on how much you can cut taxes by, how much you can increase government spending by. That should potentially have a better impact. Also, I just wanted to give you this quote from Simon French at Panmure Gordon, who reckons the UK equities are 20% below what they would be if Brexit uncertainty was removed. So effectively, we're all at a 20% discount because of Brexit at the moment. We're not really achieving what we should be achieving by about 20%, primarily because of Brexit. So what he's also gone on to say is that if Boris gets Brexit through Parliament in an orderly fashion, you could see a big double-digit return on the FTSE in a very short order. Obviously, the word is if. Now, if Boris Johnson can achieve either a Brexit deal or an exit in the most orderly way. Effectively, this could be a really, really positive outlook. Now, I know a lot of you guys have messaged me and commented, I don't know what's happening with Brexit. I'm uncertain with Brexit. Should I invest more? Should I stockpile cash? Should I just wait for the recession? There's a lot of things going through your mind. Obviously, I'm not here to advise you on what you need to do, but I think from some of these quotes, it is quite reassuring that if he's able to achieve what he needs to achieve, and obviously it is a big if, then that could be quite beneficial from a portfolio standpoint. And one of the key factors as well is that we'll probably see a lot of improvement in house builders, in retailers, in leisure companies, in banking, if obviously a lot of this stuff happens. So a lot of my stocks fit into some of those categories. So yeah, it's going to be, again, continue to be a very interesting next 6 months of the year, 5 months of the year, just because we still obviously need to have what the output of this Brexit situation is going to be, what the outcome is going to be, and that will definitely impact this portfolio. So yeah, it's doing well quite right now, because a lot of the good positive earnings, but I do expect a lot of turbulence coming in the next 6 months. But it could be turbulence in the right direction, it could be in the wrong direction. We're just going to have to see and adjust accordingly. But yeah, that's the portfolio update for today. A very, very strong performance this week. 3 stocks up 17%, which is great. A 3% increase in my portfolio value, a 40% increase in my profits. Not that much of a change with Boris Johnson, but we shall see what's going to happen in the future. Please like, please comment, please subscribe. I'll be back with another video soon. I've just produced another video on the channel, how to invest £100, so go check it out. There's been some great feedback in the comments, so I really, really appreciate it. So yeah, go check out that video, go check out the Simply Wall Street Journal, where I get into a little bit more detail in terms of some of these businesses and some of their price movements, and look out for the Q&A, the next Q&A to come in the next couple of days. Other than that, take care, have a great weekend whatever you do, and I'll catch you next time. Happy investing. Peace.